Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 index futures contract. We'll start with a weekly to get a really big picture analysis. Now, back last year when the current rally started here at the end of October, we had a successful cloud chart rebound here, as well as a rebound from the front end of the cloud chart support zone, that cluster of support there. Very strong rally. Now it became a little bit extended from the top end of the cloud. You can see a bit of a correction there, back to retest that breakout zone, rebound from that support. Now we're back at this resistance zone. Now if we go back and see where that resistance level comes from, and we've got a few of them actually. If we look at this zone here, that's the top end of the cloud there, is a key resistance on the weekly, and then the top end of that part of the cloud is also a resistance zone 4802, and then we've got these lows here as well as that high there, and ultimately the other two highs. So I'll just put this one in there as well on that high there. I'm not sure what that one is there. It is the 48064. Let me just do that. 8064. There we go. And then we've got these highs there, and we'll pop in another line over there. Just those highs there, just 4,000, 5,000 basically. We could probably put that one up to the top there, that one there. We just want to hang on and see what that one is there. 5033. There we go, 5033. So those are the upside targets on the weekly Ichimoku cloud. Back to our chart analysis here. There we go. We can see we're now struggling with this cluster of resistance. If we can get through that resistance zone, then the other target is this 5,000 target. But we're now digging into this cloud chart resistance zone. Not out the woods yet, because the downside risk now, if this resistance zone holds here at the top end of the cloud, be quite extended from the top end of the weekly cloud. So there's downside risk towards the standard line and the turning line of the cloud. That can be this zone there at 4,650, and then the front end of the cloud 4,580 basically, and then the bottom end of the cloud here at what's that zone there? It's 4,500 roughly. So these are the downside risk targets if we get a January February sell-off back down, and then a resumption of the rally in March, looking at seasonal weakness in the market. That's now if resistance holds here. If we get a breakout past this resistance zones, then that would activate the other upside target of 5,000 on the weekly Ichimoku. Turning to the daily. On the daily, if we just go back to when this October rally started, it rebounded from a cluster of cloud chart support levels here further to the left, then managed to break through the bottom end of the cloud, rebound from the bottom end cloud chart support level, broke through the top end cloud chart resistance. By that time, we've also went into a bullish territory, because price action above the cloud is bullish. So there were a couple of swing trades there, this rebound buy signal there, this cloud chart support rebound, and then the cloud cross breakout to the upside there. Now the index became quite extended from the top end of the cloud. We can see there between the price action, the distance to cloud, it then consolidated a little bit, made another attempt at a rally to get past this cluster of resistance that we now get off the weekly chart. Resistance held, and then we had a bit of a sell-off correction beginning of the year, only to test support and rebound from the standard line of the cloud. So those were two other swing trade opportunities to swing trade back up, and now we're getting close to the old high there as a resistance zone. So looking for a resistance here to hold, maybe in view of seasonal weakness in the market. We could see it be tested, maybe a quick pop there depending on what the earnings season is going to bring us, and then maybe a test back down to the top end of the cloud here. You can see, interestingly enough, the standard line here and the top end of the cloud here is pretty close to each other, together with this weekly cloud chart resistance zone 4734, which is now a support zone. So we have a cluster of support for the first quarter so far. January February support zone is this top end cloud chart support zone, as well as the standard line here. And any weakness in the markets, see those levels tested, and if those support levels fail, we could see the top end of the cloud being tested over here, and ultimately in a very weak market we could come all the way back to 4,500, the bottom end of the front end of the cloud. So quite a lot of support to come through, looking at this very wide range. Yeah, so it's critical for the market to keep support above this top end of the cloud, yeah, from an Ichimoku cloud chart perspective. But so far so good. Nice swing trade off the standard line up there, and now it's getting into a critical resistance zone. So keep an eye on those trailing profits and trailing stops on the E-mini contracts of the S&P 500. Now looking at the 4-hour Ichimoku, we can see a beautiful swing trades of this cloud chart support zones. The index then rallied very strongly, only to run into trouble at the bottom end of the cloud. You can see a bit of a reversal there. It snapped back after rebounding from the front end of the cloud. So yeah, we're quite confident trading this, taking this swing trade from this support zone. Yeah, if we look at the front end of the cloud and we project that support level back down, that's kind of how we took that trade there. And now we can see the standard line is also catching up with that. So for about 4,770, 4,775 is a major support zone on the 4-hour chart. The next level to watch out for support, if there's any kind of consolidation or correction in the current trade, is that one, 4,790, 4,790 and 4,800. So now the problem is we're a little bit extended from the top end of the cloud. So if these resistance levels come back into play there, you can see there those highs there. If all those resistance levels there from those old highs there, as well as those top end old highs there, if they come back into play, we could see a consolidation back to retest this 4,800 zone, and then this 4,792 support zone. This is a significant resistance zone, which should now act as a support zone at that level. And then if we got very weak, we might go back down into 4,771. All depends on the earnings season as well. We might get some surprises to the downside there, and that could put the brakes on the current rally. So if we look at it from a Fibonacci retracement point of view, from this move to that high there, a 23.6 Fibonacci retracement brings us roughly just above that 4,800, and then the other retracement is a 38.2% Fibonacci retracement, bring us just below that 4,792. So these are the downside support targets if this resistance zone holds. Looking at the hourly, great cloud chart cross bicycle there. Became a bit extended, consolidated back down to the front end cloud chart support level, as well as very close to the standard line of the cloud, then rallied. Note how the standard line is now a key swing trade support zone. Every time we get there, the index rebounds strongly. So now we, if this resistance zone holds, we could see it come back to retest the 4,812 zone, and that's also very close to the top end of the cloud. Yeah. So by the time the index has now consolidated this move, it could test 4821, and then by that time we expect the standard line to have caught up. So that's a critical support zone for a possible swing trade back up on the hourly. Looking at the daily again, just to wrap up. Critical for the index to break past the top end resistance zone here. If this resistance level holds, then in view of the seasonality pattern that we normally see over February down to a March low, we could see a retest of the top end cloud here for support, as well as the standard line and these other key critical cloud chart support levels. Watch out for that breakout. If resistance holds, we're going back down to front end cloud chart support levels. Until next time, happy cloud chart trading. Bye for now.